Benchmark, the voice of business. Presented by LMD.
On this edition of Benchmark, we are focusing on Sri Lanka's banking sector, and we've invited the Managing Director and CEO of Hatton National Bank, Jonathan Allis, to join us on the program today. Then, Nielsen's Managing Director, Sharang Pan, comments on the Business Confidence Index, which shed more than 20 basis points in November. And LMD columnist Deshal Timal wraps up the show with his take on Sri Lanka's macro outlook. That's the lineup for Benchmark.
Hello and welcome to Benchmark. I'm Savitri Rodrigo. This is the Big Picture Business Program, and in our studio today is the Managing Director and CEO of Hatton National Bank, Jonathan Allis. He will be discussing and sharing his views on the banking industry. Jonathan, welcome to Benchmark. Good to have you on our show.
Thank you for having me on the program, Savitri.
Just to start off, how do you broadly view the banking industry at this point of time?
Very vibrant, exciting, competitive, both within the industry and also with potential new entrants in other industries. Challenging, but increasingly playing an important and supportive role to national development policy, supporting economic development, and I think an important industry as Sri Lanka looks to take off and improve its growth trajectory over the next few years.
You know, in looking back at the industry over the past decades maybe, the transformations have been quite gradual. But then all of a sudden, the banking industry has seen this rapid acceleration and developments and changes. How do you describe this evolution of the industry?
That's a good point, Savitri. Now, if we recall, my early days, the first thing that I noted in terms of transformation is the advent of ATMs. Now, that brought about a revolution. That was a big change for us in Sri Lanka, going into the ATM and withdrawing money in the mid-80s or so. And then all the banks picked on thereafter. Then we got a little excited around the millennium when, the 2000 hit. Then the advent of internet was the next big thing, and then internet banking became an important way of transacting, as well as for banks to start communicating and for clients to communicate with the bank. And today what we see is a lot of banks focusing on mobile banking. But that's in terms of technology. Technology over the last 3 decades has steadily improved, but more so over the last 3 to 5 years, you have seen a surge in the amount of technology that has been brought into banking, both in terms of product development, new channels that are being made available to customers to provide them choice, convenience, do banking at any time that they want from any place. And but not just limited to the front end, the middle office processes to develop those products, and the back end in order to bring in more data and to strengthen your processes, further automation to make both staff happier, better working environments, therefore enabling customers to have a more enjoyable banking experience. These are some of the changes that have taken place on the technology front. But in terms of product development, we have seen major changes, and the banks broad basing its product range. And today a bank virtually does everything.
Our banks specifically have 2 distinct segments of customers. One is the customers who like the conventional way of banking, coming to a brick and mortar building, talking to the representative, and generally having one-to-one engagement. And there's the other segment. They want everything done speedily, efficiently, at the click of a button. How do you marry the two?
Oh, brilliant. Good question. I think you need to provide the both options. If the client is happy to come to the counter, he's happy to sit with the branch manager, with the customer service officer, sip a cup of tea, have a conversation, get his banking needs all addressed. We should make that available. Like I said earlier, it's about giving them choice. It's about providing convenience, and it's not just about digitalizing or let's say. But having said that, more and more clients are getting busier. The information they need now through internet and various other media is available with them. What they looked for previously in a banking experience has changed today. They need not just the information because they already have it, right? Those days you would sit with a bank manager and ask a lot of questions, understand, then you make an informed decision. But today they come with that information. So you need to add more value. You need to give meaning to that information that they carry. And that's the kind of value addition, consultancy, advisory that today the client looks for, and that should not be discouraged because there lies the business. There lies the differentiation that you're likely to create today amongst banks, because everybody will digitalize. Everybody will have all these devices and these machines. But the bank that is truly able to add value to clients would probably be the long-term winners, and they'll take customer experience to another level because of their superior understanding of their client.
And increasingly, mobile devices, the telephone, the mobile phone, is we see that paradigm of them transacting banking business. Now, how does the banking industry and the telecom industry actually marry these two?
You will see mobile companies themselves trying to get into the payment space in a big way, the likes of Dialog with their Easy Cash, Mobitel with their M-Cash, and they are facilitating a lot of e-wallets, therefore the balances, and you're able to transact. So they are already in the payment space. But like you correctly said, there's a lot of opportunity for us to collaborate. Banks have reach. We have got our branch networks. We have got our agents on our iPads and on our POS machines who could go further and reach clients. But they have taken reach to another level because they have got top-up agents and mini branches and service centers in the thousands. So there is opportunity for us to collaborate and work together, and again provide convenience to customers, because this whole thing about inclusivity is about making it convenient and reaching the customers. Expecting clients to come 200, let's say 20-30 kilometers and to do their banking is not necessarily, promoting inclusivity. The mobile phone is a great invention. And I think the future of banking, particularly in a country like Sri Lanka, where not necessarily everyone will get onto internet banking and not everyone will have computers and laptops, but everyone will have a mobile phone.
What are the main challenges that the banking industry actually faces today?
Since we were talking about technology, let me start there. So technology is changing rapidly, Savitri, and then some of these technologies, some of these products have very short life cycles. The investment into technology also is quite significant. So the smarter banks will pick the right technologies which would have some sustainability in terms of being able to use it for a period of time and bring back the returns through that. Not all will let's say generate value, but you need to actually back yourself to have the right technologies. Secondly, the advent of fintechs and the competition that could come, like you said, from the mobile phone sector, the telco sector, supermarkets and other industries that may be wanting to get into the payment services. That becomes a challenge. Let's say the new generation, post to that, I'm not referring to necessarily the millennials, but post-millennials, their interests are more short-term, and whether they're looking for 30, 35-year banking careers is something that you need to look at. Even the clients, the younger generation, the 15-year-olds and the 20-years, you will need to do your banking differently, and the sooner you adopt, you can't expect them to change the way you do your banking. You will need to change.
We're taking a short break, Jonathan, and we'll be back soon. A break for commercials, and when we return, Jonathan Allis will give us details on the must-haves for a more secure and cost-effective and fraudless payment system, a payment platform, and also how banks can reach out effectively to develop and improve SMEs better.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC. We understand that savings provide for life's special moments. That's why we were the first bank to introduce an incentivized savings scheme, Pathum Vimana. We changed how a nation felt about savings because we believe in banking beyond transactions. HNB, your partner in progress.
Thank you for staying with Benchmark. We are discussing the banking industry with Jonathan Allis, the Managing Director and CEO of Hatton National Bank. Jonathan, recently the central bank said that Sri Lanka is looking at completely adopting a more secure and efficient chip card system before the end of next year, which is 2017. In your opinion, what are the must-haves for a secure, cost-effective and fraudless payment platform?
I like that description. I'm looking for that system myself. But it's important with the increasing news that we daily view on cyber crimes, breaches in security at all levels. We have seen it at government level. We have seen presidents and ministers being compromised. We have seen central banks being attacked, banks, money being siphoned out. So it's not something to be taken lightly. So the important thing about banks from its inception has been the trust that people have placed in banks, that their money is secure. So whilst we adopt technology and we increasingly provide choice to clients, we cannot compromise on safety, we cannot compromise on that trust element. So banks should do whatever that it takes to protect their systems through increasingly there is a lot of data encryption that is used. There are devices with PIN verifications is a must. Dual authority in terms of accessing into internet and other channels, and various other public and private keys in order to protect host servers, etc. In addition, your fraud guards, your alert services need to be up and running. They need to be constantly updated. And the industry itself should come together, because this is more than a competitive thing. This is important in terms of reputation, in terms of, let's say, one bank being insecure doesn't give the others any comfort, because through that bank you could have people infiltrating and then reaching another. So it's important that as an industry we come together and provide that the required safety and take all precautionary measures.
What I understand is that banks are actually in a very good position and would be the most astute method of developing the rural sector. Now, what more can be done to reach the rural sector, especially the SME segment, Jonathan?
Yeah. We would like to think that more than 80% of our businesses in Sri Lanka are SME and below. So if I could just extend that to both SME and the microfinance segments, the levels just below or the small part of SME. It's important that banks are involved. Like for the last 128 years, this is what HNB has been doing across the country, and more recently it has gone one notch lower through its passion for microfinancing over the last 3 decades. So how do we do it better? Your branches, so your reach, your agents or your agri officers, your consultants that you recruit, you need to get them to spread themselves wider. You need to bring more technology into it so that some of the inefficiencies that lie in dealing with thousands of clients in the rural can be automated, can be made more efficient. The more you promote inclusivity, and if you're going to crowd your counters, it's not necessarily the best and most productive thing, and neither is it convenient for them to travel 20-30 kilometers to come to your branch. It's not as if you're going to open from being 250 today. I'm not going to have 1,000 branches in the next, but I will use technology. Like I said before, mobiles is a really good channel for us to use to access the rural community. If you talk of SME, internet banking, and various other methods, the ATMs will continue to be important. Cash deposit machines, recyclers will be important in reaching through. But I think what is equally important would be us getting together with the banking industry along with the chambers and with government. We need to get together in order to create that framework to provide. Now this is financial inclusivity and getting them on board. But in order to provide them more confidence, in order to give them the networks for them to go out and export directly, it's important. Right now, one of the drawbacks is that we have got a very few exporters, and they are large. That's very good for the country, but we need to broad base it. We need to broad base the SME sector, the export sector, and getting more people exporting, similarly as the need to broad base the tax base. I mean, but if you broad base these SMEs, you'll automatically be broad basing the tax sector as well, tax segment as well.
How do you view the current monetary policy stance that's prevalent?
The last year what you saw, Savitri, was a huge credit growth. I mean, banks' credits grew by 30% and more on the back of low inflation, low interest rates, low taxation, higher disposable income, lower duties. You saw a flood of cars enter the market last year. But central bank, therefore, at the beginning of this year was compelled to raise their standby rates. I think rates went up by 50 basis points from 650 to 7, and thereafter from 8 to 850. In addition, just maybe a month or two later, central bank increased the statutory reserve requirement from 6 to 7.5. That was quite drastic, a 25% increase, clearly giving a message that they wanted to take some liquidity out of the market, and it actually did work. So what you would see this year from that growth trajectory of 30%, you would probably see something like less than 20% this year. I'm just thinking 18% or so might be the growth rate for loans this year, and that was needed, and to that extent the monetary policy has worked.
What do you envision for Sri Lankan banks going forward?
I think the banks will be called upon to play a greater role. Banks would need to get smarter. Banks would need to realize what's happening globally in terms of how much technology has been brought into banking, and it's inevitable that it's going to happen in Sri Lanka. Like I said, managing your human resources in a digitalized world becomes all the more interesting, challenging, given that also it is a different type of executive or the youth who are coming out of school these days into the banking area. If you don't make it interesting for them, there are other industries that could attract them quite easily. But what I see is the bank of the future being leaner, being more digital, providing a new customer experience for which I would think those banks that use data and use data well would be the winners, and they would provide the better experience to customers. And I see the need for banks to, in addition to probably consolidating, look at collaborating both within as well as outside the industry in order to make transactions and services more efficient and provide a more holistic experience and service to clients.
Well, it seems like we have some very interesting times ahead, Jonathan.
We certainly do.
Thank you very much for joining us on Benchmark.
Thanks very much for having me once again.
So we've been discussing the banking industry, a very comprehensive interview at that, with the Managing Director and CEO of Hatton National Bank. On the other side, we have Anushan Selvaraja. Stay with us.
Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC. Sri Lanka's #1 leasing company is now the nation's largest and highest rated finance company with 2 international ratings. Let us move the nation as one with People's Leasing and Finance PLC.
Nearly 60% of all businesses in our country are SMEs. Some of our most growth-oriented financial solutions have been customized to serve this sector. That's why we have invested over 500 billion rupees to support the backbone of our economy. Because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back to Benchmark. I'm Anushan Selvaraja. Now for a closer look at the latest on the Business Confidence Index, joining me is the Managing Director of Nielsen, Sharang Pant. Welcome back to the show, Sharang. Now, just to start off with, the BCI dropped by 21 basis points. Now, what were the sensitivities behind this?
Yeah, Nishan. So I remember a couple of months back when we spoke, I did mention that there will be volatility in the index. We're seeing a lot of changes happening, whether it's to do with taxes or policies, and as a result, the index is moving up and down. So we've seen the index coming down from 165 in October to a number of 144 in the month of November. Now, the other point you need to note is the survey was done between the 1st of November and the 7th of November, whereas the budget was presented on the 10th. So the results that you see in the survey would be more in anticipation of what changes will come through and the impact of the VAT increase that happened on the 1st of November, and not really the changes that happened after the 10th of November. On the other hand, when we talk about the consumer confidence, it's actually moved up to a range of about 60-65. So that's a bit strange, but we need to see how it goes this month when the new survey is out.
How do respondents perceive our economy and our business prospects?
So after a couple of months wherein we saw an increase in the positive sentiments, this month there's a marginal decline and only about 60% of the respondents feel the economy is going to improve in the next 12 months. So that's what we are seeing on the business sentiments and what leaders talk about the economic or the macro environmental changes in the country.
So then what about our investment climate?
Let me first talk about what leaders say about their own business. So about 63% of the leaders say that their business condition will improve in the next 1 year or so. But at the same time, given the VAT changes have been recently announced, we see some anxiety for the short term, and almost 25% of the leaders say they may face challenge in the fourth quarter of the year. Talking about investment growth, so about 70% of the leaders still feel it's not the right time to invest into their own business. Last month we ran a short question in addition to the usual ones, wherein we asked the leaders what are their policies or what are their plans around investment into employment or increasing their workforce. And almost 2/3 of them said we are not planning any increase. It will remain where we are. On the consumer front, we asked them a question, how will the VAT increase impact their consumption patterns, whether it's to do in categories like food and beverages, personal care, telecommunication, because these are categories where there's been an increase in VAT. What we got is almost 1/3 of the consumers say they will spend less on some of these categories, and when it comes to telecommunication, which has seen the highest increase in taxes, almost 50% of the consumers say they will spend significantly lower. So that's something which is a little worrying. It will impact these sectors going forward.
Thank you very much for joining us, Sharang.
My pleasure. Thank you.
That was the Managing Director of Nielsen, Sharang Pang. We'll be right back after a short commercial break. Stay tuned.
When we entered the industry in 1995, a new star was born as a fully owned subsidiary of People's Bank. For those seeking to grow their businesses, PLC provided the seed. We are not only Sri Lanka's #1 leasing company, but also the largest non-banking financial institution. Welcome to a new dawn for the nation. Introducing People's Leasing and Finance, PLC. Gami Pubudua, our microfinance offering, makes it possible for the youth of this country who have a viable business plan but lack the funds to realize their dreams. We are committed to grassroots level entrepreneur development because we believe in banking beyond transactions. HNB, your partner in progress.
Welcome back to the show. I'm Anushan Selvaraja. Now for a closer look at the latest on the economy, joining me is economist and LMD columnist Deshal Dimel. Welcome back to the show, Deshal. Now to start off with, Budget 2017 was read and passed in Parliament. Now, what are your thoughts on it?
Overall, Anushan, I would say that it is a fairly pragmatic budget. I think what's important is to consider the fiscal context or the economic context in which this budget was presented. We look back to earlier on in this year, we had very significant troubles in the economy in terms of the erosion of confidence of foreign investors in the market, particularly in terms of we saw manifestations with regard to foreign investments leaving Sri Lanka's rupee bill and bond market, causing pressure on interest rates and on the currency and general a tendency of macroeconomic volatility. With the IMF agreement coming in the middle of the year in June, and then some subsequent improvements on revenue collection as well. What was important was that the budget that was presented for next year could consolidate some of these gains on the fiscal side. And I would say that this budget has done that to a great extent, much more than what we have seen in the past as well. So on that front, I would certainly say that it's a pragmatic budget and it's in line with the macroeconomic priorities for Sri Lanka in the medium term.
Now, is the government's revenue plan satisfactory?
Let's again compare it with what we saw last year. So in the previous budget, we saw an estimation of about 38% revenue growth, but that budget did not really have the teeth to be able to generate that kind of revenue, and that was really what we saw resulting in the markets losing confidence in the fiscal consolidation program. This budget is looking at a much more moderate revenue growth, still quite ambitious at about 27%. But the good thing is that there's a lot more strength to it. There are the revenue proposals are backed by a number of new revenue measures with the increases in VAT, a number of other increases in the corporate taxes, income taxes, and so on, all of which provide a realistic estimate in terms of revenue increasing. There's also a fair amount of assumptions that there would be an improvement in terms of revenue administration also. And also on the trade side, they're expecting significant growth of imports that would drive import tax collection as well. Now, I have a few reservations in terms of the predictions with regard to import tax growth, particularly because I think next year is going to be quite tough in terms of domestic demand and therefore demand for imports as well. So there may be a slight overestimate on the import tax collection side and maybe a little bit on the revenue admin side as well. But by and large, I think most of that can be compensated for some of the other revenue measures that are being predicted. So in sum, I would say the revenue measures, on aggregate, I think are reasonably practical, and I think the government should come quite close to meeting those targets.
How will these changes in the taxes affect our trade and, more importantly, our economy, Deshal?
So the most significant of the tax changes is of course going to be the VAT. Now the VAT increase of course happened before the budget was passed, but I think that's going to be one of the significant components of the tax regime next year. So with the increases in VAT and then also coupled with the increases in income taxes and corporate income tax, that is really why we are going to see probably a subdued demand growth in 2017. So you're going to see consumption is probably going to be somewhat weaker, and I think that is going to cause aggregate demand to slow down a little bit into 2017. It's going to be a bit tough in terms of business progress. But I would also say that this is still, we should also keep it in line. We should keep in mind the context, as I mentioned at the beginning as well. The fact that we needed to have this fiscal consolidation this year and an ongoing program into the next couple of years as well. Now, if we look at 2017 and 2018, there is a relatively mild year in terms of what we are expecting for external debt repayment. So it's an excellent time to really consolidate this fiscal side and to get our house in order, because come 2019 you're going to see a lot more debt repayments coming in. So we need to have a strong fiscal footing in order to ensure that we have confidence in the markets to be able to meet our debt repayments. So in that context, from a medium-term perspective, it's certainly this budget sets us on the right kind of footing. But in the short term, we're going to have to expect some kind of pain and some kind of subdued demand in the next in the next year at least.
Thank you very much for joining us, Deshal.
Thank you, Anish.
That was economist and LMD columnist Deshal Dimel. Thank you for watching Benchmark, and we hope to see you again next time.